Hey everyone. There have been a lot of questions about what's happening in the real estate market and concerns about how the real estate market is being affected by COVID-19. There are people who need to buy and sell despite what's happening right now. And there are a lot of people who have put their home up for sale and taken it off temporarily until things go back to normal. But I've heard a lot of questions and I wanted a chance to answer some of those questions. So today I have with me Sean Maloney. He is my in-house mortgage broker. He's fantastic, and hopefully you'll have a chance to work with him one day. He's going to answer some questions for us. Hi, Sean. How you doing?
Hi, I'm doing well, thanks.
Good. So, Sean, one of the questions that I keep hearing is what's happening with the changes in the interest rates? They seem to be changing hour by hour, day by day.
Yeah, so prior to all this, the rates dropped. We were looking at the high 2% range, low 3% range. It was a big refi boom. Things were great, and then shortly after, any given day, they've been up 0.5%, down 0.5%. It's a roller coaster, and honestly, it's changing by the day. So whatever you're quoted at, just anticipate that until you're locking in, you're probably not going to get that rate. So, there's a lot of volatility in the market right now.
Okay, and how are you helping your clients through that?
Basically, I'm quoting them and I'm letting them know, giving a projection where we were over the past week. And I'm like, here's where rates were Monday, here's where they were Tuesday, so forth and so on. And I'm like, here's the range that you can expect to be in. And if you want this rate, here's what it looks like if you have to pay points, assuming that the rate goes up 0.25%, assuming it goes up 0.5%, heaven forbid it goes up an entire percent. One thing that we're doing is that we're asking our realtors to try to get concessions on the seller side, because you can cover the points that we charge for an interest rate covered by seller assist. So let's say we quote somebody 3.5. By the time we go to lock in, it's at 4%. They don't want the 4%. So we charge them, we have to charge them points to get them down to 0.5%. And then that can be covered by the seller assist from the seller of the house. Right now, it's more of a buyer's market than it is a seller's market. So, it's not unreasonable for ask for those types of concessions. But honestly, we're just being open, transparent with everybody, not quoting them a rate with points. Every time I quote a rate, it has no points included. And if there are any points, my branch or myself, we're going to be covering it out of pocket. So, in the event that that rate deviates, then we're going to have to start talking about points. But, the way that I'm helping people is just kind of giving them an idea of what's going on in the market right now.
That's awesome. Thanks. So how have government or conventional loans changed?
Government loans are a little tougher to get done right now. For what the reason is that no one's buying them on the secondary market. So, they come with higher stipulations. It's very rare to see any government loans get done with below a 620 credit score. The debt to income ratio seems to be getting capped on some of the government loans. So you can't max out the debt to income on most of them, depending on the company. And some of them want to see liquid reserves at closing, which is very rare for, a government loan. Most of the time people are using all their money to get into the home. Conventional loans are being bought like crazy right now. So you're seeing the lower interest rates with conventional, which is crazy because usually it's the government loans that have the lower interest rates. It's a little easier to get conventional than it is to get government right now, which is usually the opposite. It's usually the government are more lenient with their guidelines and make it easier for people to get in. So that's how, it's been a complete and total flip-flop. So anybody who does any loan officers that do a lot of government loans, they're probably hurting right now. And, anyone in rural areas doing the USDA, FHA, they're probably feeling the effects of this a lot more than the people that are primarily built based off of conventional products.
Okay. Are appraisals being performed differently?
Well, as of yesterday, the governor ordered that appraisals, you're not allowed to go inside the house.
Right.
So, yeah, to say that they're being done differently is an understatement. They're doing desk appraisals, which is, they're gathering comps and they're looking at pictures. They're doing drive-by appraisals, just looking at the exterior of the home. For some refinances, we're seeing property inspection waivers, which means that the house does not need an appraisal. So right now it is very tough to get appraisals done. And if the property requires an appraiser to go through the house, it's probably not happening.
Okay. And do you find that it's taking longer to close a loan?
Yes, as a result of the appraisers, it is. They're backed up right now. There's a lot more hoops that they have to jump through. It's basically they're like 2 to 3 weeks out on any appraisal. We're getting appraisals it's taken much longer. So yeah, closings typically we can do 3 weeks, a month in a closing. Right now you're looking at probably close to 40 days. I just got one under contract that we're doing a 30-day closing, and we ordered the appraisal like the day of, and you're just gonna have to hope that
Yeah.
the appraiser gets it done. And a lot of people keep calling me like, where's your appraiser? Well, it doesn't work like that. It's not my appraisals are done by third-party companies, and we order through an appraisal management company. They do a round robin for all the local appraisers. So really, it's some of them are just choosing not to work right now, and the other ones that are they're completely backed up because they're taking on the load of all the other appraisers. So yeah, to circle back, it is taking longer to get loans done now than typically, but hopefully that's not forever.
Yeah. Are you seeing as many people shopping for a mortgage, or maybe people looking to refinance their current mortgage?
Seeing a lot of people looking to refinance right now. I'm getting more calls than I ever did. A, the conventional rates are lower. B, you can skip 2 payments when you refinance. You can take up to $2,000 in equity at closing. So you can take that money, use that to cover your next payment. You get all your escrows that you currently have back in a check within 15 to 30 days of closing. So you can take that money and you can also use that for monthly payments. So I have some people that are able to, effectively skip 6 months of payments because they're refinancing. Plus, you get a lower monthly payment.
Right.
You sometimes drop from a 30-year to a 15-year, and your monthly payment stays the same, but you also get a significantly lower interest rate. So yeah, on the refinance side, I'm seeing a lot of it. I'm still getting a consistent wave of people coming in to get pre-approved for a mortgage, but they're not out shopping. I'm getting maybe like 1 contract a week. Usually this time of the year, it's like they're just flooding in the door. So
Right.
the purchase side is definitely slowed down, but people are refinancing. And honestly, I would recommend that highly over doing a forbearance, because you're going to owe that money back, getting the forbearance that the government's allowing right now. Whereas if you refinance, you benefit from it and you get to skip all those payments, and you're doing it the right way.
Okay, great. Have credit score requirements changed for any products?
So yeah, as I said before, for FHA and primarily for FHA, at one point it was I think a 660 credit score. Right now, my company's down to a 620. I have heard of a couple companies like on a case by case basis doing below 620. There has to be, like I said, compensating factors. Why is the credit score that low? Do they have liquid reserves? What's the debt to income ratio? All that type of stuff. But yeah, as a whole, you're seeing higher requirements for government credit scores to be higher.
Okay. And how about the loans that were already pre-approved prior to COVID-19? Are they still being funded?
Yes, they are. All purchase stuff is currently, prior to, is all being funded. I haven't seen any instances from my company, at least, or from like the bigger companies, the mortgage companies, that where things have not been funded. I've had clients come to me and say, this mortgage company, they said they can't do the loan anymore. So I think that the smaller companies, the companies that fund less than $1 billion a year, they're struggling right now. And the reason is because the people that they're getting their warehouse line of credit, and that's the money they borrow to lend, they're drying up, or they're no longer funding them. So luckily, my company, the people that we borrow our money from, they're all still here, and then the people buying it on the other end, they're still there too. So we're good to go. But the smaller companies are definitely feeling the effects of all of this right now.
Okay, great. Well, Sean, is there anything else that you want to share with the people who are watching this?
Honestly, I would just continue business as usual. Just be safe. I wouldn't put yourself in any type of harm's way. But, if you have somebody who's interested in purchasing a home, send them over, get them pre-approved. Now we have more time than ever to look through all of their paperwork, their tax returns, their W-2s, their 1099s, their pay stubs, their bank statements. we can give very solid pre-approvals right now. We can even give mortgage commitments right now. That's somebody get a mortgage commitment before they're even under contract for a house, which, holds a lot more weight than a pre-approval or pre-qualification.
Right.
Honestly, I would just, build up your pipeline and, get your people pre-approved. Don't tell them to wait till all this is over. So that way, once this is over and there's a huge influx of houses coming on the market, that you have a client who can put an offer in right away, and they can put a very competitive offer in. Like I said, stay safe, keep your social distance, take this time to, be with your family, be with your pet, and just enjoy this time in a safe manner. But at the same time, if you are looking to make a purchase this year, this is definitely the time where you want to get all your ducks in order.
That's awesome. Thank you so much for sharing all of this information with me today. I really appreciate it. And is there a number that people can reach you if they have more questions about the mortgage process?
Absolutely. Just call me on my cell at 484-798-9084. And again, Sean Maloney with NFM Lending. I'm your mortgage man.
All right. Awesome. Thanks, Sean.